everybody. This is Mark Pontz from loanDepot, and welcome to the Mortgage Moment, where I, a loan officer with over 30 years of experience, try and tell you some of the little details about a mortgage you'd love to know before you start digging in. Let's talk today about private mortgage insurance, or PMI. PMI is an insurance. It is not insuring your house against fire or damage. It is insuring the lender who lends you the money against your default on the loan. If you were to default on the loan and you have private mortgage insurance, the lender is paid by that insurance. And it is required on anything with less than 20% down payment, with some caveats that I'll talk about later. And it is a sliding scale in that the more money you put down as far as a percentage, the lower your cost of mortgage insurance each month. 5% down would be X amount, 10% down would be Y amount, 15% down would be Z amount. It lowers as you increase your investment in the property and the transaction. Another thing that impacts your private mortgage insurance cost per month is your credit score. Just like the rates will change based on your credit, so will the cost of private mortgage insurance. Normally I give you examples, but I can't because everybody's private mortgage insurance cost could be different, and I don't want to lead anybody into thinking a certain amount of money is going to apply to them when it may or may not, for better or for worse. But it's important to know these things, that it will be impacted by credit score and amount of down payment. The other thing is, once you have private mortgage insurance, to get rid of it, you have to prove that you have 22% equity in the property, not necessarily 20. And it generally requires at least a 24-month period before they consider dropping it. And you'd have to get a new appraisal. These are things I can help you with if you're a client of mine, and prove that the value's there, but it's not impossible to get rid of. There's a little bit of a process. And as far as other types of mortgage insurance, there are what's called lender-paid mortgage insurance, which means you can put down 5 or 10%, and instead of paying a monthly amount, we will self-insure that loan, but your interest rate might be slightly higher. Sometimes this works in your benefit as far as a monthly payment. It's something you should look at, and I always suggest to my clients that have mortgage insurance, what if we did this? There's some theory that it's a little bit better for your tax benefits, but taxes change so often, I don't like to get into that. But that's one way to get not the monthly payment. The other way is called a split mortgage, where you put down, say, 10% of the purchase price of the house, and we establish a second mortgage for you for the other 10%. So you'd have two separate payments for a first mortgage and a small second mortgage, but no PMI on that. Just a couple of the ways to not have to pay it if you don't have 20% down. I also want to mention that FHA has its own version of PMI. It's called Mortgage Insurance Protection, or MIP. The things you want to remember there are, it is more expensive in general to have MIP versus PMI. It is a life of loan thing where as long as you have an FHA loan, you have that mortgage insurance cost. You cannot drop it regardless of your equity. You can refinance your home loan, and with the new loan, if you have equity, you won't pay private mortgage insurance. But that's the only way to get rid of it for an FHA loan. Also, FHA, in addition to a monthly amount, charges an upfront amount of 1.75% of the loan amount, and that's financed into the loan. So technically you're paying a higher amount of interest over time because you're paying a higher mortgage, because that insurance is folded in, that lump sum FHA mortgage insurance premium. And again, you still have the monthly amount each month. So that's just some small ins and outs about private mortgage insurance. I would be happy to talk about any specific questions you have. Just call me at 475-4444 or email me, mark@markpontz.com. And of course, if you're a working client of mine, we'll have discussions about all of these things. So hopefully I helped share a little bit of information for you, and I hope you enjoyed the video. We'll see you again soon.